Hello and good afternoon, everybody. It's great to have you here on the Halftime Talk feature interview series. I'm delighted today to be joined by Sheikh Khaled Ahmad Al-Sabah, Managing Director of International Marketing at the Kuwait Petroleum Corporation, to discuss the latest trends on the oil markets and his outlook, really, for what is immediately ahead of us. So we're delighted to have you with us. Thank you so much, Sheikh Sabah, for joining us today.
Thank you, Dala, for having me. It's nice to be with the daily energy market with the broadcast, and really, it's good to be talking to you live, and it's good to share, let's say, insight about KBC and Kuwait at their latest projects.
Fantastic. Thank you so much. Sheikh Sabah, I'd like to start, before we delve into KPC's projects, but of course, talk a little bit big picture and just get your point of view as one of the major oil producers in the region and in the world on the dynamics of the current oil market. We've had a very interesting couple of years, post-COVID recovery, etc. We see oil prices, particularly in the last couple of months, gaining some strength. And the market today seems to be split again on whether they're concerned more about demand or supply. You've got the China stats coming out, and at the same time, we have OPEC plus tightening supply and prices now comfortably at $90 a barrel. So from your point of view, are we now on an uptrend on prices? And if so, why?
Okay, well, I think we should define, first of all, what is the high prices and low prices. I guess the market now is towards setting up a new era of pricing mechanism, and how that would correlate with supply and demand. We've seen lately, as you said, pre-COVID, after COVID, until now, the prices have been in a quite a change mood. Nowadays, I guess OPEC and OPEC Plus have been trying to balance the market, with the supply and demand, and that's what kept the prices at the current level. I guess nowadays the market have to accept that the prices of let's say 50s, 60s no longer there. The industry are accepting those type of prices. And we can say, with the political situation, as you know, we have supply and demand and political influence on the prices. Having all those in one equation, I think 80 to 90 dollar barrel is really, I would say, the just price and the fair price to the market, to the consumer and the producer so far.
Okay. Thank you. So just to pick up on that, on the $90, where we've just settled really at $90, and who knows what's going to happen. Would you say that OPEC Plus as a group would, if we got any higher, let's say we settle at 95, let's say we hit that next sort of ceiling, if you like, from a trading point of view, would that start to make the group feel a bit uncomfortable from a consumer point of view, how that might start to impact demand? And therefore, would they act?
Okay, well, OPEC and OPEC Plus, they want stabilized market. They want stable prices, as I said, for both consumer and I think 90 to 95 is not very high price. Having said that, lately we've been seeing that the market are really accepting those type of prices. So I don't see any higher than this, although as a producer we wouldn't mind higher prices, but let's say we are quite comfortable with those one. We've seen lately that in the production side from non-OPEC member there is no new investment, and that shows that the forecast for the prices is at the current level will not encourage a lot of new investors to come to the market. Although IOCs, we in Kuwait, we are going within a plan. KBC, for example, now is toward investing more in the upstream. We're gonna go to 4 million very soon. The plan is to go to 2035. Yet, I think we're gonna go ahead of that plan, ahead of those dates that I mentioned, 2035. So far, I learned from my colleagues in KOC that maybe 25 we will see we are reaching the 3 or 3.2 level quite soon.
Okay, and I mean, do you think, you mentioned there has been, of course, underinvestment by non-OPEC countries at these prices? As you said, we need the industry needs to know it has a trajectory of attractive prices to make those decisions, and then, of course, in parallel, you have the whole green track, which is kind of putting people off, if you like. No doubt, though, we still have demand for energy in the immediate sense. Two questions just to follow up on that. Do you think the GCC producers, the OPEC producers as well, can cater to any increase in demand that you might be expecting in the next 10, 15 years on their own? Or do we need that non-OPEC supply also to come online quicker than it looks like it's coming online so far?
OPEC members have been always, let's say, balancing the market, I would say, more or less. Yet I can say that most of OPEC producers and our colleagues and friends in the Gulf are investing also in the upstream, not only to balance the market, but to keep a good production level at the time of need, just in case. I would say it's a balance. Yet probably as a marketer, I would say the AG area have been known and as a sour grade producer rather than sweet grade. Yes. And this is where all the refiners have an eye on. I mean, this is every refinery now investing to upgrade their refinery to use, let's say, sour grade. So coming back to your question, I think that the OPEC members and in the Gulf, they will try to secure any shortage in the market if needed. Yet we always want to balance the market rather than just produce and market oil.
Okay, keep it in balance. I mean, of course, one of the big areas that OPEC and Gulf producers supply is China, is Asia, east of here. That is the growth area also for the next 10, 20 years in terms of additional growth in demand. Now, as you're very well aware, one result of the Ukraine-Russia war is that Russian oil has been sanctioned to an extent, but it's still making its way around the world and at a discount into China, into India a lot this year, significantly. That was a big uptake from India this year. Do Gulf producers, or Middle East crude producers, sort of see any permanent impact from the fact that these two big consumers are taking more Russian oil? Will that impact their demand security, if you like?
Well, this is really quite an interesting question. Nobody can deny that the Russian-Ukrainian war have impacted the oil market heavily. And now we can see most of the Russian oil is going toward the east. Yes, China and India, they became a base load buyer for the Russian grades. We've seen quite massive quantities going to India. And I'm sure this is displacing other grades. The fear that those volume will be permanent there, I guess, is we are overestimating the situation. There is always a formula for marketing the oil. Economics will always the lead. Credibility will always the lead. Relationship is always there. Now there's a situation because of let's say the sanction, why it's distant to those markets. Yet, if I'm gonna talk about Kuwait, we've maintained our market share in both markets, specifically India and China. We're still receiving a good demand from those two countries, especially China. Yet, because we have started the Zohr refinery in Kuwait, we've been trying to limit those volumes just to keep it with, I would call it in-house. Yet, we are looking at all those markets, trying to have a good market share, as we've always had. And you know, with our ambitions to increase our production, I'm sure that we would need our friends and partners in the industry to distance those barrels in the future.
Okay, and you mentioned the Al-Zohr refinery and a lot of investment in Kuwait in recent years into ramping up its refining capacity. You mentioned we're trying to keep it in-house. I mean, are you referring to domestic demand, to perhaps regional demand? How much does sort of regional Middle East demand factor into Kuwait's refining plans as an exporter versus further east, if you like?
Okay. Just to be more specific in-house work, you know, we've been exporting our OPEC quota, yet with the Zohr, which gonna take about 615,000 barrels, with the existing Al-Ahmadi refinery of 800, we will refine about 1.4 refining capacity. And honestly, this is a quite sizable quantity as a refining capacity. We are focusing now more, as I said, although we are marketing our crude oil, yet now we are focused more on our refining products. We're gonna have about 33 million of middle distillates. As you know, after our CFP project, clean fuel projects in Al-Ahmadi, now we can meet the European spec. So we're sending diesel, jet to Europe. And probably you've heard that, you know, I think we are the first or the second largest exporter of jet fuel to Northwest Europe area. This
Give
probably
give us your take on that demand actually to Europe of jet fuel and diesel for that matter. Given Europe's current sort of economic trajectory, the manufacturing, Germany's had a few negative headlines in terms of its economic activity. I understand this is about KPC's sort of pivot to more into a new market. But how does a company like yours look to that as a future growth area?
Well, we've always, you know, KBC have its reputation of going to new market while maintaining the existing market. We have quite a good market share in the East, which we've always had. Yet after the CFB, we've been looking at Europe more in terms of jet fuel and diesel. Africa is under the radar. We're looking at Africa as a new market to us, although we have good contracts in African country, but we think there's a good demand there, which we are trying to develop nowadays. As I said, having such a huge volume of middle distillates, over 30 million ton of middle distillates, will allow us to diversify our market share in all markets, Africa, Europe, and the East. And lately, I've heard from my colleagues, you know, we might have some cargoes going to the States. Yet we're going, I wouldn't say baby steps. We always been trying to raise and compete with our fellow friends and partners in the market. So we want to go and let's say go to all those markets and have Kuwaiti hydrocarbons there.
Okay, and I mean, part of that, of course, competition, if you like, into those markets is trading. KPC recently announced its move into the trading as setting up a global trading desk, if you like, a la Aramco Trading, etc. Give us an update on that and what the plans might be for that.
Okay, with trading, and this is quite I would call it the question of the whole interview. Yes, the plan is to go for trading. We're going in a quite strategical way, baby steps of doing all the internal studies in KBC. The plan is there. I think very soon we'll go to the board and probably get some approvals. But I would say the initial approvals have been granted. Just that we need to do the proper setup. Location, we haven't decided yet. There is many options on the table. I know that there is many talks where we're gonna have it, with who, how we're gonna do it. I guess we're gonna answer all those questions at the right time in probably a conference, telling everyone what exactly we want to do. So yes, we are in that track. I know that most of neighboring countries and countries have been doing trading. We've learned from their experience that it's quite successful and it's challenging, yet it's I think the return were quite good. So we are there, Dali.
Okay, well, Sheikh Khaled Sabah, I think we'll end there on that positive note of looking to the future, on that trading note. Thank you so much for joining us, Managing Director of KPC International Marketing. Thank you so much for joining us today on Halftime Talk.